on LinkedIn, on Twitter, and on Facebook as well. We welcome you once again on one and all present here, and also would like to thank you for taking out time and attending session and skilling your knowledge on the recent topic, which is today's our session, a special webinar on amendment and the clarification issued after 47th GST Council meeting. And we welcome our today's chief guest, CA Naveen Garg sir, Chairperson NIRC of ICAI. We are very thankful to you for taking out your time from busy schedule and giving us a opportunity to address all our attendees. Thank you so much, sir. We also thank you, CA Rakesh Garg sir, for presenting today here, and sir, session is also there tomorrow for entire 1 hour. We are very thankful to you, sir, for the your time and your sharing your expert knowledge on the subject. We also thank you our the webinar director, we can say, Advocate CA Kashish Gupta ji from Paksh Legal. So thank you, Kashish ji, for the organizing, basically making this happen and connecting all the experts on our platform. We are very thankful to Kashish Gupta ji. He himself is a expert and author on the subject. We also thank you our co-speaker CA Garima Jindal ma'am, also from Paksh Legal. Thank you so much, ma'am, for the accepting our invitation once again. We also thank you, Advocate Rohit Arora ji from RBI Legal, who has joined from mobile. So thank you so much, Rohit sir, for the joining for today's session as well. So with this, we welcome once again Chairman sir, C. Naveen Garg sir, NIRC of ICAI. Sir, I would like to request you to deliver your keynote address, sir. Sir, Naveen sir, you are on mute, sir. Please unmute yourself, sir. Yes, sir.
Oh, it's okay?
Yes, sir. Yes, sir.
Actually, I am using this website first time.
Yes, sir. Yes, sir.
Yes, Viragji, founder Connect Easy, Rakesh Garg sir. I know sir very from the last many years when GST was in the process to implement by the government, and there was a lot of guidance by the sir in ITO our institute, and in 2014-15, I'm talking about 14-15. At the time, sir give a lot of contribution to prepare background material by the model GST law and background material by the ICAI. My younger brother Kashish Gupta, he's also from my native place, Ukrana Mandi. Garima Jindal, young and dynamic expert on GST. Each and everyone, audience, and Virat, I think Rohiji also is here. Thanks for giving me the opportunity and inviting me on this platform. This is really very good platform. I come to know by Kashish that Connect Easy is organizing webinars on each and every topic in relation to our profession, and I come to understand that this is hey, yesterday we got the notifications, and you know that this is a requirement of the day, and you conducted this webinar in advance. This is the beauty of this platform. Congratulations to all of you conducting this type of such webinars. I'm also I was also speaker on that topic. You can easily understand that we visited UK and Ireland in 2014 to understand GST law, and in 2014-15 we sitted at our ICAI Bhavan head office to understand GST. At that time, a lot of other group was also there, but we have prepared GST law background material for GST law at that time. But now my duty is to administrate our NIRC activities. So I left to speak on this technical topic, and we NIRC are dedicated to find out new speakers, providing the platform to each and everyone whoever is interested. Save anyone who is here hearing to me and can approach NIRC for speak at any platform. We are here to create new speakers. Being our job is not we can speak also on this technical topic, but we are not more focusing on to create speakers for our chartered accountant members. Say, I think by this platform, Virag Saji, you also find out some good speakers. You can also provide us, and NIRC is committed to that. Any speaker we will provide a platform to each and every speaker, and after that we will give him the training also to say flourish himself herself also. So sorry, I'm getting some calls. Apart from this, with respect of NIRC, I can say that we are many more focusing on classes of GST, GMC's classes, OP classes. With respect of this, I request each and everyone who want to take the classes, please approach us, give their resume and 5 minutes video to us so that we can connect all of you with the OP and GMC's classes. Being you can easily understand that this is a very good platform by the provider institute to learn by self and to the students also. Rakesh sir, you are also here. Sir, we need actually what we are going to propose board of study that we need guest faculty also for 15 days classes. Sir, what you say about this? Say we are planning that we do such have a platform that you need to register yourself as GMC's OP faculty. We NIRC branches approaches you or any dynamic speaker or professionals who can come at our platform of these classes for 3 hours and give their deliver their actual experience with the students. Actually, what is going on with the students? Usually, motivational speakers come and they are usually demotivated by their performances. In these cases, sir, please, you are also very much associated with the ICAI. You please give approach our thoughts with our board of study and president sir that this is our proposal that for 3 hours, anyone who is very well established in this practice or job, please visit our students' classes and motivate them and how they get success in their profession in future. This is one agenda, sir. Next thing is we NIRC is committed to provide a platform to all the members where they can get draft opinion on say GST, income tax, any other matters also, draft appeals, so that members who are just start their practice can get this benefit to draft any opinion or appeal. So with respect of this, we need the help of say speakers like Kashish Gupta, Garima, Jindal, and many more who can provide and help to all the members. Being by this platform, I started my practice with service tax. In starting days, I was missing how to draft a opinion, how to draft a appeal, how to quote proposals to our say to companies. So that is very small thing, but need of the day, I request if Kashish Gupta, Garima Jindal, Rakesh sir, you can provide some blank without quoting the name of the client and the other figures. You can provide some opinion or appeals to the members. We will launch the same with the help of you. This is a कुछ small things sir दिमाग में है जो कि being the chairman of NIRC we can do. Apart from this, each and everyone I request किसी के mind में and if someone have any suggestion or feedback हम लोग क्या कर सकते हैं क्या नहीं कर सकते, please call us. This is my commitment and this is my guarantee recorded है ये कि within 24 hours आपके पास मैक्सिमम टाइम तो ये होगा कि कॉल आपकी पिक होगी, ऐसा होगा नहीं कि मैं फोन ना उठाऊं, लेकिन बाई चांस अभी क्लास ले रहा हूं 2-4 कॉल मिस मेरी हो गई है, तो विद इन 24 आवर्स आपके पास कॉल बैक होगी ही होगी. अगर आप कोई भी व्हाट्सएप करते हैं, कुछ भी अगर करते हैं हम लोगों को, 100% एक्शन लेते हैं। हमारे आंख और कान प्लीज आप लोग ही हैं, सभी के सभी। तो जैसे आप हैं ऐसे ही मैं हूँ, तो इसमें ज्यादा डिफरेंस नहीं है। जितना मेरे पास दिमाग है उतना ही दिमाग आप लोगों के पास में है। आप लोगों के पास लगता है कि इस चीज का कोई सजेशन है, इसको इस तरीके से कर सकते हैं, प्लीज हमें कॉल कीजिएगा। तो यहाँ पर हम लोग 1 साल के लिए से मैं चेयरमैन बना हूँ। ऑलमोस्ट 4.5 months already left. I have only 7.5 months. So this is my commitment. Whatever I can do for members, I will always there. Say with respect of GST, I can say that this is the time of our chartered accountant. Sometimes we say that audit चली गई है तो काम कम हो गया है. So thanks to our government, our finance minister ma'am, that day by day they give a lot of amendments for us. तो हमारा स्कोप कभी खत्म हो ही नहीं सकता जीएसटी के अंदर. और अच्छी बात है कि विदाउट साइन किए हम लोगों को फीस मिल रही है, हम लोगों को इसका एंजॉय करना चाहिए. हम लोगों को एक्सपर्ट बनना है, हमें कंसल्टेंट बनना है, हम लोगों को कोई ऑथेंटिकेट नहीं करना है किसी बुक्स को. With these words, again, I want to say thanks to all of you. Thank you, everyone. Thank you. Over to Virag ji. आप muted हैं.
Yes, sir. Thank you so much, Naveen sir, for wonderful keynote address, and your effort for NIRC and the members and the students is really appreciable. Due to social media, even we are from West, we are from Mumbai, still we can able to know the activities of NIRC, and you are doing the commendable work, sir. We can see the newsletter as well, and there are so many activities and the event happening. Entire NIRC is now a happening region, I can say, under your leadership, sir. So we are really feeling proud that our institute and the leaders of the ICAI is doing great efforts for the members and the students to take our profession at greater heights. So thank you so much, Naveen sir, for your wonderful address, sir.
Thank you so much.
Thank you, sir. So would like to request first CA Rakesh Garg sir. Sir has a session tomorrow, but today also as an inaugural note, would like to request to address the attendees, sir. So over to you, Rakesh, sir.
Am I audible?
Yes, sir.
Am I audible?
Yes, sir.
Okay.
Yes.
First of all, welcome to Naveen ji, our chairman, and Virag ji, Kashish, Garima, and all the panelists and all the participants. First of all, I must congratulate to Virag ji and Kashish for organizing such program, because we have completed 5 years and number of amendments have come through this 47th GST Council meeting. If we look at the GST Council meeting, then these 4 hours, whatever the organizers have thought, this will not be sufficient, but certainly we can have the idea. Before that, coming to suggestions of Naveen ji, it is a wonderful thought Naveen ji has had, that what should we do for our younger professionals, how to improve their communication skill, how to develop confidence in them for drafting, and meanwhile to prepare some sort of specimens and drafts for them so that they can easily be used by changing the name or small corrections. This is a wonderful thought, because we, particularly, I am not saying about Kashish and Garima, but at this age, this is also our duty for the senior professionals to train our younger professionals, because we should give whatever we have learned, not academically. So far as academically is concerned, Kashish may be more intelligent than me, but so far as experience is concerned and appearing before because we learn mainly through the appearing before the authority. Many times we are how to present our case, how to represent, how to understand all these things, how to understand their behavior as well, because that is also very, very essential. And certainly the senior professionals should share whatever they can share with the younger professionals, so that this will be some way similar to the new course that we can give our best, and we can train to them at the earliest, because otherwise also they will themselves train within 5-10 years. That is not the problem, but if we give our experience, they can certainly be trained in a lesser period. So this is a wonderful thought, and whatever contribution I can make, I will certainly make. I will request to all the seniors professionals that they must come forward and whatever experiences, whatever knowledge they want to share and they can share, they should share. So coming back to this program of 4 hours, it's a wonderful program, and if we look at the journey of 5 years, then we cannot say that we have not gained anything. We have certainly gained through this GST regime. Number of taxes have been subsumed. Earlier, there were number of taxes. Now we have only one in lieu of 10. So far as the collection is concerned, collection is also improving month by month. If we look at the collection of 2022, it is almost 1.4 lakhs crore per month. It is almost 8.5 crore lakhs crore. So the collection is also improving, but certainly whatever the government wanted to achieve, certainly they are somewhere lacking behind. That is why the states are still asking for the compensation. Had it been so easy, or had it been so smooth, the states would not have sought for the extension of the compensation, or alternatively for changing of the ratio from of CGST, SGST 50/50 to somewhere 30/70 or 20/80. So still some problems are there, but I'm sure that these problems will be settled in the time to come. So for the 47th meeting, if we look at the meeting in 3 lines, we'll find that the efforts have been done that so that reduction in the inverted duty, is the inversion of the taxation should be reduced. So by and large, all the efforts have been made that there would be minimum refunds. All the works contracts, barring few, have been taxable at 18%. We'll discuss tomorrow when my session is there. But this inverted duty structure, government have only two alternatives. One is either to reduce the input rates, and the second one is to increase the output rate. The government chosen the second one because revenue neutral rate is, we will find that the government is still lacking behind that magic revenue neutral rate. So therefore, some taxes need to be increased so that ultimately it will be settled. So this is the first one, and the other amendments are in relation to removing of the exemptions. So certainly some exemptions have been withdrawn, and some, but I think that will have the inflationary effect. But certainly that will be the initial regime, and as and when the things are settled, the rates would also be perhaps be reduced. So with this, I appreciate the efforts of Virajji, Kashish, Garima, and all these. And again, Naveenji for his wonderful thought. And thanks for the participants for joining this program. Thank you.
Thank you so much, Rakesh sir, for the wonderful inaugural remarks. And we'll have a full session tomorrow in the morning. So would like to request everyone to join tomorrow as well at 11 o'clock. Sunday, we have a very good knowledge sharing session from Rakesh Garg sir and Advocate Rohit Arora sir. Now coming to back for our today's session, we have Advocate CA Kashish Gupta ji with us. He is expert himself, taken a number of sessions in physical session, in COVID, in virtual session, and he himself author of multiple books. Recently, he has in 2022 write a book on GST tracker, which is very essential for each and every GST practitioners. So details we'll share in end of the Kashish sir session, and even Sir Kashish sir also will inform about the book and the basic of books, what exactly book is all about. So with this introduction, we welcome you, Kashish sir, and would like to request you to take the proceeding ahead for our today's session. Over to you, sir.
Thank you, Virajji. Thank you, Viragji, for organizing this session. It was a thought which came to my mind when 47th GST Council meeting was happened, that we should have an session on this amendments on or before 18th of July. That is by the time when all amendments would be notified in the form of either notifications or circulars, and we have a very good first hand on the discussion on these changes. And we have devoted around 2 weeks preparing for all these things, for studying the things, so that we can come prepared before the audience and give them the maximum benefit. I also thank you, Naveen. I call him Bhiya only because he's from my native place only. So I thank you, Bhiya, for being here to guide us and to let us know about your vision. I still remember about the very first day of your session as a chairman of NIRC when you briefed us about this concept of having a platform wherein we can help our younger brothers by way of assisting them in submission of quotes to the client, by way of guiding them how to draft appeals, so that they can take up the good works in the beginning with confidence. And sir, and we are it's a thumbs up from our side as it was on day one, and we can have a meeting anytime and we can execute it with full spirit. Of course, if Rakesh sir is also there, then this work will speed up. So we all are here. And now coming back to the curriculum which we have designed for 2 days. See, the amendments which have been come after 47th GST Council meeting can be categorized into 4 parts, which we have done. One is the amendment which relates to GST compliances, how the behavior of compliance is going to change as a result of these amendments. Then various refund related issues have been clarified, which involves uh, settling down the inverted duty structure so that there can be no cases of the refunds under that category, as the government has revised the rates of a lot of items in this amendment so as to take care of inverted duty. And if there is any refund under the inverted duty structure, then how formula was not giving the appropriate results as which was discussed by Honorable Supreme Court in the judgment of VKC Footsteps, and wherein they also gave the directions to make some suitable changes in the formula so that desired refund can be taken by the beneficiaries. Those amendments have been made in the formulas, and very good amendments related to the electricity exports. You can say export of those items which are either exempt or which are kept out of GST have been clarified from time to time, and this time the mechanism to take refund of those goods which are exempted from the GST and but which have been exported have been clarified by those making appropriate amendments in the rules. Garima would take all of us through those changes. Then all changes related to the rates. These are not only the changes; these have their economic effects also. So when I was discussing about these changes with Rakesh Garg sir, he briefed me some of his analysis, which he will guide us in detail tomorrow. But just to give an overview that few amendments have been made in such a manner that they are only revenue generating activities for the government. For example, charging of tax rate on the hospitals where the room rent is more than 5,000 rupees. So since hospital comes under the exempted category and the entire burden is on the patients who are unregistered persons, the government is surely going to have a more revenue, and these are only the amendments which will fetch revenue to the government in addition to the revenue which was already there. And then effect of removal of exemptions, whether the language of the exemption notifications are properly crafted or not. So all these kind of legal analysis along with the keynote addresses would be given to the audiences tomorrow. And then in the last, the much debated and much argued issue of all times, fake ITC. Fake ITC essentially, if it is a fake, has to be paid back to the government, but the issues revolved around the manner of recovering this amount. The taxpayers were complaining that for one amount recovery is being made from 2 or 3 parties, or if it is not being made, then the penalty is being received from 2 or 3 parties. So in order to harmonize everything, a circular has been issued by the government wherein they have clarified how they will proceed with the recovery proceedings. And on this, Mr. Rohit Arora from RBA Legal, he will take us through the details. Now, starting from today's presentation on the GST compliances, at first taking you through the executive summaries, there was an issue that when an exporter exports the goods, he was given some benefits in the form of scrips, which are called as duty credit scrips, were given to the exporters. Now, take an example of export-oriented units. Export-oriented units are allowed to import duty-free, and they export duty without levying any taxes. Now, on the exports, they get some duty credit scrips. These duty credit scrips, suppose if duty credit scrip is for rupees 1000, this 1000 rupees can be used to save the basic custom duties on the imports being made. Now, in such kind of cases like of POUs, wherein their import is duty free, they have no option except to sell this duty credit scrip. Till 18th of October 2017, there was a tax on sale of these scrips. Thereafter, these were being made absolutely and unconditionally exempted from the tax. Now, since it is absolutely and unconditionally exempt, Section 17(2) comes into the play, which says if any common input tax credit has been used to supply a taxable supply as well as an exempt supply, then the credit pertaining to exempt supply is to be reversed. At this time, there used to be divergent views over what is the meaning of common credit. We as a consultant used to advise that common credit is bare minimum because duty credit has come, you have sold, no input has gone, okay, internet can be there, so you take internet services, you take other renting services, mobile connection charges, etc., etc., etc. Bare minimum is used to prescribe. But the problem used to come from the assessing officer side. He had a very peculiar view. He said, you have got this duty credit script because you have manufactured a lot of goods, you have exported them. So entire ITC in the form of raw materials, your services, which has gone into the manufacturing of goods, which are being exported, as a result of which you have got this script, is a common credit. And there used to be exorbitant demand on the cesses because entire ITC has been taken as a common credit. On that, we used to say that entire ITC is not common. Anyone is not exporting the goods merely with a mindset that he will get a duty credit scrip. Duty credit scrip, as per foreign trade policy, is an incentive given to the exporters so that they can boost the exports. So there is a difference between incentive and the purpose of export. I am not exporting for the purpose that I will get a scrip. I am exporting because I am in the business and I have to export it at a competitive rate. And the government is incentivizing me so that I can maintain international prices at a very minimum level so that Indian products can be sold at a rapid pace in the international market. So now, as a result of these amendments, all these arguments has been set aside with, and they have accepted our view, saying that duty credit scrip turnover will be excluded from the exempt turnover, and hence there is no requirement to make any reversal. Even bare minimum reversals, which we used to argue, that is not required. If there is any sale of duty credit scrips, ITC is not required to be reversed. Now, question arises whether this amendment can be said to be retrospective. We can see in the coming time to courts to interpret this term, but what we consider as per our analysis is that it is an explanation, and explanation being explanatory in nature and being trade facilitative explanation has to have a retrospective effect. Therefore, these changes should be applied retrospectively. Now coming to second category of registrations, if there has been any cancellation of registration on account of non-filing of returns, a composition dealer, if he has not filed the returns for 3 continuous tax periods, a normal taxpayer who has not filed the return for a continuous period of 6 tax periods, if the registration has been cancelled, then, sorry, if the registration has been suspended but not cancelled, but prior to the cancellation of registration, if we furnish all the pending returns, then there would be deemed revocation of cancellation, meaning thereby your registration will be restored back to the original level. There is no need to visit the Office of Assessing Officer with a request to revoke the suspension and restore the registration. And it is a very good and trade facilitating amendment, because we used to know there was a lot of issues involved in making a visit to the department officer and getting him convinced to restore the registration. However, in this amendment, the reference is made to Subrule 2A. Subrule 2A enables the assessing officer to proceed to suspend the registration on the basis of comparison of GSTR1 with 3B, GSTR2B with 3B, or any other analysis. So, to our mind, this reference of Subrule 2A is misplaced in the proviso. It should have been Subrule 2, which gives power to the assessing officer to cancel the registration in a situation when the returns are not filed. Coming to the next amendment, it is related to the extension of due dates. A quarterly taxpayer is required, composition dealer is required to file a quarterly return in form GST TMP 08 and annual return in form GSTR 4. So the quarterly return is required to be filed by 18th day of the succeeding month, and annual return is required to be filed by 30th day of the following month following the end of financial year. So for quarter ending June 2022, the due date was 18th July, which has now been extended to 31st July. The annual return for financial year 21-22 was due to be filed by 30th of April 2022. It is still 30th of April 2022, but the late fees has been fully waived if we file this annual return on or before 28th of July 2022. Now, question arises why the due date has not been extended, but the late fee has been waived. Is because of the various reasons that the various clauses in the law which relates to the power of officer to issue demand orders, etc., runs from the date of filing of annual return, which is a due date. By not extending the due date, the time limit of issuing any assessment orders and taking any action under the law has not been parted with. It is still the same. Just the benefit of late fee has been given to the taxpayers. Again, for annual return in form GSTR 9 and reconciliation statement in form GSTR 9C has been made optional for those taxpayers whose aggregate turnover is less than 2 crores. However, reconciliation statement in form 9C is already not required to be filed for those taxpayers whose aggregate turnover is less than 5 crores. So these are the similar amendments which has been carried forward. Next amendment relates to the transfer of cash ledger balance between the distinct persons. A distinct person means a person who is having a same PAN number but having different GST numbers. Now the cash ledger balance can be transferred from one GSTIN to another GSTIN, but there is one condition. The condition is that if I am transferring the credit cash ledger balance from GSTIN 1 to GSTIN 2, then there should not be any unpaid liability in GSTIN 1. Now this reading seems to be very simple, because if you are an assessee and I tell you that there should not be any unpaid liability, you will memorize that, okay, there was one order, I have filed an appeal, it is stayed. There were some observations of the officer, I have paid voluntarily in 3, everything is paid, there is no unpaid liability. But you may be wrong. Because why? Because the manner in which the electronic liability register is being maintained on the portal and the manner in which we are executing the compliances, it has been observed by me in recent past that these were different. For example, if there is an assessment order issued against you in form DRC 07, after issuing DRC 07, the amount is also posted in your electronic liability register as a demand due from the assessee. Now, if you file an appeal against that order, then pre-deposit is made in form APL 01. If the pre-deposit is made in form APL 01, then the electronic liability register demand will be reduced by 10% automatically. For example, the demand is for 1000 rupees. You file appeal in APL 01, and in APL 01 form itself, you made the pre-deposit of 10%. Then the demand will be reduced by rupees 10 100 and the balance amount will be rupees 900. But what I have seen in some cases that assessees, instead of paying through the APL 10 form, they have forced mentioned therein that pre-deposit is nil and filed the appeal, and they have separately made the pre-deposit in form DRC03. Now, what form DRC03 actually is? Form DRC03 actually, if we read the law, is the form for making voluntary payments. Now, once the form DRC03 is filed, the effects given in the electronic liability register are, it will create the demand and then reduce the demand. So what is the result? It will say form DRC07 demand 1000 rupees, voluntary demand 100 rupees, tax paid 100 rupees. In the result, demand unpaid 1000 rupees. And since this demand is not being, this pre-deposit is not being made from form APL01, it will not marked as stayed in the liability register. And hence it will show unpaid liability 1000 rupees, despite the fact that you have filed the appeal and the demand is stayed. So there is a very much requirement to scrutinize your electronic liability register in order to form a view that everything is stayed if there is any demand, or if there is any demand unpaid and that was paid, the liability ledger is showing the balance as nil. If there is any mismatch, then you have to file an application in form GST PMT04. GST PMT04 as on date is not electronically available. So you have to have a manual application prepared and approach your assessing officer, asking him to pass the entries in the electronic liability register so that the demand can be streamlined. Then the payment of interest. The interest rate has been reduced to 18% by way of making amendment in the Finance Act 2022 itself. Finance Act 2022 got assent of the President on 30th of March 2022. So the notification number by which the interest rates were notified stood retrospectively amended with a retrospective effect from 1st day of July 2017 to mention that interest rate is 18% in all kinds of cases. We will also discuss the changes made in the interest related clauses, the Rule 88B, in the slides to come by in detail. I am not taking you through the observations as of now. Then certain relaxations have been issued in filing refund application. The relaxations have been issued from 1st day of March 2020 to 28th day of February 2022. It is that this time period will be excluded. As a result of this, many cases which pertains to tax period March 2018 has got the life that the refund claim in respect thereof can be filed in 2022. We will discuss case by case when we will reach the particular slide. Then time period to do assessment under section 73 for financial year 17-18 has been extended to 30th of September 2023. We will also discuss this in detail in the slides to come by. Then for the purposes of issuing demand order for recovering the refund which was sanctioned erroneously, for those demand orders, the time period of 1st day of March to 28th day of February has been excluded. It has a result of giving life to certain cases which were already became barred by time. We will discuss the impacts thereof and our analysis thereof in the slides to come by. So now, starting from the first slide, which I have already briefed all of you in great detail, just taking you through point by point. Input tax credit is not allowed if it is exclusively for the outward supply, which is exempted. And then input tax credit is, which is a common credit, which is being used for exempt supply as well as non-exempt supply, has to be apportioned, for which Rule 42 and 43 are there. Rule 42 is for the apportionment of input tax credit on input and input services. Rule 43 is for the apportionment of input tax credit for capital goods. Now, this is the entire picture of section 17. If there is an input tax credit which has been mixed use, which is being used for business as well as non-business use, or which has been used for making mixed kind of supplies like exempt supplies or non-exempt supplies, then that input tax credit is required to be apportioned. Manner of apportionment is given under section 17 subsection 6 in rule 42 and 43. Rule 42 is for input and input services, rule 43 is for capital goods. Now this is a note which I have already briefed in my opening remarks, that duty credit scrip was exempted by notification number 35 by 2017 rate with effect from 13th October 2017, wherein the rate was reduced to nil. Absolutely and unconditionally it was made exempted. Now section 17 subsection 2 asks about reversal of common ITC, which pertains to taxable as well as exempt supply. The problem was that the department was saying entire ITC is common because whatever goods have been exported, the duty credit scrip has been issued as a result of those exports. And since a lot of raw materials, input services, capital goods goes into the manufacturing of the goods which have been exported, as a result of which duty credit scrip has come, is common credit and the duty is required to be reversed. Now, we also filed few appeals on this point which were pending for adjudication as of date, and it's good that they were pending for adjudication because now the notification has come and we will definitely apply the benefit of this notification. And there is a judgment of Honorable Supreme Court Constitutional Bench in the case of Vatika Townships, which says that a statute which is being issued to remove the doubts or the amendments which are curative in nature will operate retrospectively. So we expect that this amendment is retrospective in nature and will be applied from 1st day of July 2017. Now, deemed revocation or suspension registration. Friends, sub-rule 2 of Rule 21A, which speaks of suspension, gives power to the proper officer when he has a reason to believe that the registration is liable to be cancelled under Section 29 or under Rule 21. So this rule gives power to the officer to cancel the registration under Section 29. Sub-rule 2A gives the power to the officer to cancel the registration after making a comparison of returns, that is Form 3B with Form GSTR1 or with Form GSTR2B or any other analysis, that he can cancel the registration by way of issuing notice in Form GST-REG 31. Sub-rule 4 says, if any registration is suspended under sub-rule 1, 2 or 2A, 2 or 2A we have just discussed, 2 is for the proper officer who can cancel the registration if he has reasons to believe that provisions of Section 29 or Rule 21 are invoked, or sub-rule 2A, which gives power to him to cancel the registration on the basis of certain comparisons. If the registration has been so suspended, it shall be deemed to be revoked if the proceedings under under Rule 22 are completed, meaning thereby he has cancelled the registration. But this proviso has now been inserted, which says if the provisions of Rule 22 are not completed, meaning thereby the registration is not cancelled, but it was cancelled, suspended on account of clause B or clause C of subsection 2 of section 92 of section 29, meaning thereby it was suspended for non-filing of returns, then it shall be deemed to be revoked upon furnishing of all the pending returns. Now our observation is here, sub-rule 2A. It has been misplaced. If the registration has been suspended for non-filing of returns, that suspension is under Rule 21A, sub-rule 2, not under sub-rule 2A. Therefore, this expression should be revised to sub-rule 2. It should be considered as a claricatory error, and therefore the beneficial effect of this notification should not be stopped. And if the registrations are suspended for non-filing of returns, on filing of all the returns, it shall be deemed to be suspended. Revoked. Now coming to the returns. Friends, to understand the quarterly returns by the composition dealers, I have reiterated the languages of the section 39 subsection 2 as it stood from time to time. Section 39 subsection 2 from 1st day of July 2017 to 10th day of November 2020 said that there shall be a return for every quarter which is to be filed within 18 days. Then the amendment made by Finance Act 2019 was notified on 10th day of November 2020, which said the return shall be for every financial year or part thereof, which shall be filed within such time as may be prescribed. Prescribed means prescribed by rules. Therefore, with effect from 10th day of November, whatever is the return, whatever is the manner of filing the return, or whatever is the time limit to file the return will be prescribed in the rules. Since this amendment was made by Finance Act 2019, Rule 62 was amended on 2019 itself to say that there would be a return in form GSTR4, which is to be filed within 30 days of the April following the end of financial year, and there would be a quarterly statement in form CMP08, which is to be filed on 18th day of the month of the succeeding quarter. Prior thereto, it was only quarterly return in form GSTR4. Since the amendment during this period in the Act, that is Section 39(2), was not yet made effective, it was the government executed Rule 62 through a special procedure-wide notification number 21 by 2019, which provided the Rule 62 word by word in a similar manner, and the dates were being extended in pursuance of powers invoked under Section 148. But when the notification number 81 came and the Section 39(2) was notified with effect from 10th day of November 2020, Section 39(2) became the parent provision, which said that there shall be a return which is to be filed within the time provided by rules. Rule said that return is to be filed in form GSTR4 and it shall be filed by 30th day of April following the end of financial year, and a quarterly statement is to be filed in form CMP08. So in our view, after 10th day of November 2020, these amendments should not have been issued under notification 21 as a special procedure of 148. It should have come under Section 39(6) because the Commissioner has power to extend the date of filing of return. Despite having this power, recently Form GSTR4 for financial year 2021 was extended to 1st day of June 2021 via the notification numbers mentioned here. These were issued under Section 148, which the way of executing this to our mind is wrong. Again, now CMP08 has been issued. This date has been extended as a special procedure under 148, again, which is not correct as per our understanding of law. It should have been extended by the Commissioner by issuing a notification under Section 39(6). Or if they cannot issue a notification under Section 39(6) to extend the time limit for CMP08 form, then they should have extended it by way of inserting a sub-rules in the Rule 62 in the same manner as they did for annual return under Section 80. For financial year 2020-21, annual return in form GSTR 9 and reconciliation statement in form GST 9 say its due date was extended, and such due dates were extended by way of rules. In the rule, sub-rule were inserted providing the same, because the Parent Provision Act says in Section 44 that date will be prescribed. Prescribed means prescribed by rules. So if they have to prescribe the date for filing quarterly statement for form CMP08, if they are of the view that this is not a return under Section 39 subsection 2, it shall come by way of rules only. Otherwise, Commissioner has a power under Section 39 subsection 6 to extend this date. Now coming to annual return, which I have just discussed. Now taking you through the language of the Act from time to time. This is the latest language which says every registered person shall furnish an annual return, including a self-certified reconciliation statement within such time as may be prescribed. Prescribed means rules. So they are saying that a registered person has to furnish annual return with a reconciliation statement, that is 9 and 9C, within a time which will be given in the rules. However, the Commissioner has the power that he can exempt any class of persons from the requirement of filing the annual return, as they have exempted that assesses having turnover up to 2 CR from the requirement of filing annual return even for financial year 2021-22 by way of notification number 10/22 dated 5th of July. Now we are having these three observations as a result of the change in the language of section 44, saying that the notification exempted any class of persons from filing annual return is not to be issued as a special procedure under 148. These are now being issued by the commissioner, which is proper. The date of filing annual return shall come by rules, which I have just told you, and accordingly rule 80 has been amended. For financial year 2021, rule 80 was amended to insert subrule 1A and subrule 3A to provide the due date of filing annual return for financial year 2020-21. Now, why is this happening and what happened from time to time? Let us have a look. This is the language when the GST law came. It said every registered person shall furnish an annual return in such form and manner as may be prescribed on or before 31st day. So date was given in the act itself that every registered person has to file an annual return by 31st day of the December, and he has to file an reconciliation statement along with the annual return. There was no power in the act to extend the due date. Hence, they observed a difficulty and removal of difficulty orders came to be issued from time to time, by which the due date of filing annual return for financial year 17-18 was extended by the removal of difficulty orders to 30th June to 31st August to 30th November and then to 31st of January 2020. In the meanwhile, due date for financial year 18-19 was also extended to 31st March 2020. This all was happening through removal of difficulty orders. The trend of removal of difficulty orders ended on 31st December 2019 when the amendments made in section 44 were made effective from 1st day of January 2020, which said that the commissioner has the power to extend the time limit for furnishing the annual returns, keeping all other provisions same. Therefore, the due dates for the very first time were being extended from 1st day of January 2020 by way of issuing notifications by the commissioner under section 44, which for 17-18 was extended to these dates, for 18-19 was extended to 31st December 2020, and for 19-20 was extended to 31st day of March 2021. Thereafter, a requirement arose that few category of taxpayers be exempted from the requirement of filing the annual return, and that requirement was executed by way of issuing a special procedure because there was no provision in section 44 to exempt any category of taxpayer from filing the annual return. So that was so done by way of issuing notification by way of a special procedure. But now, when the amendment made by Finance Act has been notified, with effect from 1st day of August 2021, the commissioner started to issue notification for exempting the taxpayers from filing the annual return. Hence, this notification has been issued by a commissioner now. But there is now another change, which is very absurd, that if any due date for filing the annual return has to be extended, Rule 80 will keep on amending to insert a subrule. I am amazed why the power be not given to the commissioner in Rule 80 to notify the extension of due dates. Why for every extension in due date of annual return, the Rule 80 has to be made very lengthy by way of inserting subrules. This is an absurd execution of the law to my mind, and it should be changed, and commissioner should be given the power to extend the due date for filing the annual return as it was being given earlier. Now coming to the payment of tax. While section 110 of the Finance Act 2022, various amendments were being proposed in section 49. And only this amendment has been made effective now. The paras in the highlighted font are added by Finance Act 2022. So it basically allows transfer of balance lying in the cash ledger from one GSTIN to another GSTIN. As I said in my opening remarks, these are the few examples which you need to check to determine that there is no unpaid liability in the electronic liability register. If there is any demand order and appeal has been filed, you check whether the demand has been categorized as stayed, which generally we have seen is not so categorized. If there is any demand in DRC 07, the made by using the tab payment against demand. If form DRC 03 is created, then the liability register will show the unpaid liability, and it will restrict the transfer of cash balance from one GSTIN to another. As I said in my opening remarks, if any pre-deposit was not made through APL 1 but was made through 3, the demand won't be categorized as trade, and it will show unpaid liability to the extent of pre-deposit, at least if it is marked as trade also. So these are the things which you need to take care, and you need to check your electronic cash ledgers, liability ledger, to verify whether there is any unpaid liability or not. Now coming to the interest calculations. Friends, before starting this discussion, let me tell you there are two phrases which has been statutorily distinguished by the Act. One is the deposit of tax, second is the payment of tax. Section 49(1) talks about deposit of tax, and Rule 87 says when the money which is deposited is credited to the government account, your challan will be given a CIN number, challan identification number, and amount would be credited to the cash ledger. So this process, even though the money has gone into the government's account, is being termed as a deposit of tax. Now, what is the payment of tax? Payment of tax, as defined in section 49, subsection 4, is a point of time when the balance in the cash ledger or credit ledger is being utilized for the payment of output tax under the Act. And Rule 61, which speaks about Form GST 3B, says that the tax is to be paid by debiting the cash ledger or credit ledger. Therefore, the lawmaker's intention by way of Act is very clear that if the tax is paid late, they are not saying if it is deposited late, they are saying if the tax is paid late, then there would be interest applicability. Hence, if I consider a situation that your liability under the law was 10 crores, you deposited the cash in the cash ledger for rupees 10 crores by the due date, but due to some reasons, you filed your return after 10 days. Then there have been disputes before the trade which says that since the money was already lying in the government's account, interest for these 10 days should not be taken from us. Here, this kind of arguments won't work, to my mind. Why? Because the tax is only deposited, it is not paid. You are liable to pay tax and have failed to pay tax by the due date. Therefore, interest will be there. But yes, if return was filed late on account of some technical errors, or the money was deposited with a bank account on due date, but credit to the cash ledger took time which was beyond your control, then a case may be made out and the court will grant relief by way of not imposing the interest. Having said this, we all have seen a lot of changes in subsection 1, which says at first that interest was to be paid on gross tax liability. Then government agreed that okay, it will be paid on the net tax liability. Then administrative circulars came which said the retrospective amendment in the law is yet to be made out. Till the time the retrospective amendment is made, interest will be calculated on the net tax liability. Now the retrospective amendment came recently, which said that it will be on the net tax liability only and only in one circumstance. That is what, that if there is any liability, you have shown that liability in form GSTR 1. You have also shown that liability in your 3B return of the same tax period. And if there is a delay in payment of taxes, then that interest shall be charged only on the amount paid from the cash ledger. But if there is a case that liability was shown in the GSTR1 for the same tax period, but it is paid in the 3B of the different tax period, then there would be an interest liability on the gross tax liability. Or if there was a liability in GSTR1 in the same period, 3B in the same period, but these returns are being filed after commencement of proceedings of show cause notice under section 73 or 74, then the tax would be paid on the gross tax liability. Now here comes a situation that if the tax return with the form GSTR1 was shown with the correct tax liability, there was short payment of tax in 3B, which was compensated or which was made full by way of filing DRC03 for the balance payment. Will it be considered as tax paid in the same tax period's return? I think as per the language of the proviso, it won't be considered so. And in that case also, you will be required to pay interest on the gross tax liability. Therefore, all these kind of amendments force the taxpayers to make a representation to the government that amendment facility for the return be allowed, so that the effect can be given to the proviso. Subsection 2 said that the manner of calculation of interest will be provided by way of rules. These rules never came. It has now been notified with effect from 5th day of July 2022, and we will see what these rules are all about. Section 50 subsection 3 has been substituted. Earlier, the language was based on section 42, 43 matching concepts. Since the matching concept has been done away with, it was also proposed to be removed from the statutory paper book White Finance Act 2022. Notifications are yet to be made effective. The substituted language now reads is that where the input tax credit has been wrongly availed and utilized. Friends, if the ITC is wrongly availed but not utilized, there is no requirement to pay interest. If it is wrongly availed as well as utilized, then the interest shall be paid. Now let us see few illustrations. If the supply is made in the tax period July, declared in the return for July, due date was 20, but the return is filed on 31st of July, then interest will be for 11 days. Second is the amount is the net amount which is paid from the cash ledger. But if it is filed after commencement of proceedings under 73-74, then interest would be on gross tax liability. If it is declared in the return for next tax period, that is a tax period different from the tax period in which liability is shown, then the interest would be for 1 month and 11 days. If because the date of filing of the return is again 31st of August, and it would be paid on gross tax liability. If the GSTR1 for July 2022 showed this amount, but it was not declared in the return but paid through form DRC03, in this case also interest would be paid for 11 days on the gross tax liability. However, we are of the view that government should at least allow payment of interest on the net tax liability in this case also. Now, this is the manner of computation of interest under subsection 3 of section 50. Now, this section has been very technically drafted, though reading sounds to be very simple, but it is, to my mind, has been very technically drafted. Why? It says ITC wrongly availed and utilized. Its interest has to be paid starting from the date of utilization. The date of utilization are given here, which are two type of dates, and it is to be paid till the date of reversal of such credit or payment of tax. Now, on what amount is to be paid? They have mentioned only to the extent of utilization. We will discuss this. Let us discuss this through an illustration. For example, I have availed the wrong ITC in July 2022 for ₹1,000. Closing balance of my credit ledger was 2,000. Then there is no utilization. There is only wrong availment and hence no interest. But if my balance is 800 rupees, that is balance in the credit ledger falls below the wrong availment of ITC on account of return being filed. That is this line. Input tax credit wrongly availed shall be constituted to have been utilized. when the balance in the electronic credit ledger falls below the amount of input tax credit wrongly availed, the extent of such utilization shall be the amount utilized. That is, it has been fallen by rupees 200. So 200 is the amount of ITC wrongly availed and utilized. So the interest to be paid from, let us see what is the date of utilization of such input tax credit. Because the interest is to be paid for the period starting from the date of utilization of such wrongly availed ITC. The date of wrongly availed ITC is the date on which the return is due or the actual date of filing, whichever is earlier. Now, this is a very technical point which they have inserted. For example, if my return is fallen due for filing on 20th and it is being actually filed on 30th, despite the fact that you have not utilized the ITC, they are asking you interest from the due date, that is 20th. So here, due date of filing the return or actual date of filing the return, whichever is earlier, shall be the period of interest from which it shall start. Taking a situation wherein 1000 is the wrongly availed credit, 2000 was my balance in the credit ledger, but subsequently I filed Form DRC 3, by which payment of rupees 1500 was made and the balance was rupees 500. Then in that case, 500 is my amount of credit wrongly availed and utilized. But here the date of utilization of such input tax credit would fall under clause B, because this balance has not been reduced on account of filing of any return, but for other cases. Then in that case, the date of debit in the electronic credit ledger would be the date of from which the interest period will start. Now, considering a mix of situation like this, wherein after filing my return, the balance was reduced to 800 rupees, and subsequently by way of filing DRC 3, the balance was reduced to nil. So there is a wrong availment and utilization for rupees 1000 itself, but broken into two parts, 200 and 800. And its interest period will start in a two different manner. For rupees 200, it will start from the due date of filing return or actual date of filing the return, whichever is earlier. For rupees 800, it will start from the date of filing of DRC 03. That is the date when the debit was made in the electronic credit ledger. Now, interestingly, another aspect, we have discussed here what is the amount. Rate of interest, we already know that is 18%. We have discussed when the interest period will start. Now let us see when the interest period will end. It says it will end on the date of reversal of such credit or the date of payment. Now consider a situation, if closing balance of ITC after filing the return for December is restored to rupees 1500, that is more than rupees 1000. Now in this kind of cases, since the balance has been increased from rupees 1000, but there is no reversal, or neither there is reversal nor there is payment of tax, the interest would not stop, it will continue. So here we are appealing to the government by way of making a representation in the days to come by that, at least in these kind of situations where the balance in the electronic credit ledger is increased from the amount of wrongly availed, then the interest should stop for that period, or that period should be excluded from the period of computation of interest. So this is all about our observations on these interest related points. Now coming to the relaxation, we all know that for filing the refund application, the period has been excluded from 1st day of March 2020 to 20th day of February 2022. At first, the Supreme Court has ordered to exclude the period from 15th day of March, but the government has given a further grace period by allowing it to be excluded from 1st day of March. Now we have done the analysis case-wise. In case of export of goods out of India by sea or air, by land or by post, the relevant date is the date when the ship or aircraft leaves India, or when the goods passes the frontier of India, or when the goods are dispatched by post office. So this is the relevant date. Basically, we treat bill of lading as the relevant date, because bill of lading is a document which provides the evidentiary value when these things leave India. Now, for the cases up to which exports were made up to February 18, their relevant date was expired prior to 1st day of March 2020, so nothing can happen in those cases. But the cases which falls between the period March 18 to Feb 20, their relevant date was March 20 to Feb 2022. This period is absolutely excluded. Therefore, the balance period as on 1st March shall be made available from 1st March 2022. For example, for the month of March 18, let us take 31st March 18. The relevant date ends on 31st March 20. So as on 1st March 2020, 31 days were with the taxpayer to file the refund application. Since 1st day of March 22 for the 20th day of Feb 20 would be excluded, he will have 31 days starting from 1st day of Feb 2022 to file the refund application. Now, question here arises is that the amendment has come now on 5th of July, and if there is such kind of assessee who had the time till 31st day of March 2022 to file the application, but he did not file the application because this notification was not there at that point of time, nor the Supreme Court order was there which gave him power to file that refund application, because Supreme Court order covers the period starting from 15th day of March 2020, then a case can be made out to approach the court by way of writ remedy asking for suitable directions to entertain his refund application by starting the period from 5th day of July 2022. So in the cases of March 20 to Feb 2022, the 2 years shall start from 1st day of March 2022. Now, in cases of refund applications which are categorized as deemed exports, for example, the supply made against advance authorization, supply made against EPCG license, or supply to EOU units, or supply of gold by bank or specified PSUs against advance authorization license, the relevant date is date of filing of return. For the sake of easiness, let us take his 20th day of the subsequent tax period. So the analysis will remain same, just we will step back 1 month prior to the above dates, because here the due date is falling by 20th of the next month. Above, the due date was in the same month, that is the date of export. So therefore the analysis is same, but we are stepping back 1 step. In case of export of services, the relevant date is the date of issue of tax invoice or date of receipt of payment, whichever is later. So if that later date falls in these periods, the analysis is same. Now coming to this inverted duty structure. Up to 1st day of February 2019, the relevant date was the end of financial year. With effect from 1st day of February 2019, the relevant date was made due date of filing the return. So ignoring this for a time being, considering the relevant date as a due date of filing the return, the analysis will remain same as it has been made here. Now the question arises, which should be the relevant date for an SSC, whether end of financial year or the due date of furnishing of return? Honorable Supreme Court in the case of Mafatlal Industries clearly said that the refund law shall be seen as on the date of filing the refund application. So if you are filing a refund application today, the relevant date would be the due date of furnishing the return. But if you have filed the refund application on or before 1st day of February 2019, the relevant date would be this only. Now, in all other cases, a simple comment has been given that exclude this period for the period of computing the eligibility period. In case of payment of tax, if the payment has been made under wrong head of payment, then there are 2 kind of relevant dates. There was much confusion that what is the meaning of the expression subsequently held. It was being clarified on 24th day of September 2021 that even if the intrastate payment, which was made as intrastate earlier, has been corrected out of his own motion by the taxpayer, it would be covered within the meaning of the term subsequently held. And since the clarification came on 24th of September 2021, it said for all the payments made before this date, relevant date would be this. Therefore, the period will be excluded, and they will get the fresh period of 2 years from 1st day of March 2022 to file the refund application under this category. For others, where the payment under the correct head has been made on or after 24th day of September 2021, the relevant date is the date of payment under the correct head. So in those cases, this period will be excluded and the relevant period will start from 1st day of March 2022. Now, in case of SEZ supplies, friends, this is a very peculiar circumstance in case of refunds. Earlier, these cases were covered under this clause, end of financial year. But an amendment was made wherein this clause was excluded. And if we read the entire law of the relevant date for the supplies made to SEZ unit has not been given. Now, in these cases, we have been left with a general clause that payment of tax. It will work if the supply to SEZ units has been made with payment of tax, then the date of payment will be the relevant date. But in cases where the supply has been made without payment of tax, then what would be the relevant date is still a question mark. So therefore, we have not offered any comments on this as of now. Under section 55, the refund is being given to canteen store departments, foreign embassies, etc., which are given the time limit of 6 months from the end of relevant quarter, but by way of a notification issued, that period was extended to 18 months. Therefore, I have given the periods and the same remarks you may go through once you are on the PPT. Now, in case of erroneous recovery of refund, directly coming to the analysis, these are the cases where the show cause notices are being issued with for the reasons other than erroneous recovery. Now, in this kind of cases, the law says that show cause notice has to be issued at least 3 months prior to the time limit specified under subsection 10, and subsection 10 says a demand order has to be issued within 3 years from the due date for furnishing the annual return. Since the due date for 17-18 was 5th of February, for the sake of business, I have not taken 7th February. I have taken is 5th February. So the order shall come by 5th February 2023. Now, in this case, if the show cause notice is issued on 10th of November 2022, it was not being issued within time because it is not prior to 3 months. If it is issued on 4th of November 2022, it is prior to 3 months and it is within the time. But now this date has been extended to 30th of September 2023, and accordingly, the time limit to issue the show cause notice shall also get affected by this. And the notable point here is that it is a due date. So even if the annual return was filed earlier than the due date, the time limit to issue show cause notice and demand order won't get affected because it is the due date which is to be taken into consideration, not the actual date. Now, in case of erroneous refund, the date of bank credit is the relevant date. For example, for July 17, if the refund was being credited in March 18, the relevant date to issue the order in original was 26th day of March 2021. Now, if in cases where the refunds were sanctioned prior to the date, after these dates, then they were already become barred by time. But by way of this exclusion, this notification, a life has been again given to those cases that they are within the time. As far as my knowledge is concerned, it is a settled law that once the claim has become dead, it cannot be put to life once again. So there are any cases wherein the order in originals were issued after a period of 3 months from the date of bank credit. A case can be made out that this benefit of this notification will not accrue to the government. Now, few of my observations are that the time limit to extend the period of making the assessment under section 73, is it really a force majeure under section 168A? The government has not issued the removal of difficulty order under section 172 for the reasons that they have lost the right to issue it after 5 years. The law came from 1st day of July 2017, 5 years ended on 1st day of July 2022. So they are not having any power to issue a ROD order. 168A is being used in case of force measures, but whether this is a force majeure, I think This is not a force majeure. This extension has been given because of the non-readiness at the end of the department, non-readiness of the audit manuals, non-initiation even of the assessments by various state GST departments, and therefore this extension we can see the courts to interpret in a manner as we are pleading right now in the days to come by. Now, changes in the compliance format. Just to quickly take you through, whatever is highlighted is being changed. So this table has been inserted in the form 3B to mention that if any supplies are being made by me, in respect of which taxes are to be paid by e-commerce operators under section 9(5), I will declare in this. But if I am an e-commerce operator, then I will declare in 1. Major changes have been made in the manner of reporting of ITC. Now, in form GST 2B, entire ITC is being auto-populated and was being shown in the respective tables. Said ITC included ineligible under section 17(5) also. So if that is there, they are asking you to reverse that amount here only, so that net amount can be credited to the electronic credit ledger. Earlier, the banking institutions were reversing the 50% credit under the category of others. Now they are specifically asked them to report this amount under 1 by way of making a specific reference of Rule 38. Now, major changes in this table. This table is not going to affect the amount which is going to be credited in the electronic credit ledger. It says if any amount has been reversed here in others column for the reasons that payment has not been made within 180 days, or for the reason that the goods are in transit. This is very important. If any goods are in transit, ITC will be auto-populated here by form GST 2B. But since the goods are in transit and are not received, conditions of section 16(2) clause B are not fulfilled. So you will reverse here, and you will mention here ITC to be ITC reclaimed, which was reversed under table 4B2 in earlier tax period. So when the goods will be received back, you will mention the amount here in the subsequent period that it is being reclaimed. Same is for reversal made for non-payment within 180 days. When the payment is made and ITC is reclaimed, you will mention here. And this is the amount which again will be shown in table 4 of form GST 2B, that if there is any place of supply related clause, that you are in Delhi but your supplier has mentioned place of supply as Haryana, then it will reflect here. 2B will not show this amount here. Now, important point notable here is that the word used is restricted, and it is other detail, it is not ineligible. So it gives a food for thought to me that whether the ITC which is pertaining to those inward supplies wherein place of supply is other than my state, am I ineligible for that credit, or it is only restricted by the government? Restricted means I can reclaim it in future when the corrections would be made out. Or without prejudice to this, if I have a reading of the law, it gives me impression that there is no blockage in the law which says if credit pertains to other state, I cannot claim it. So we can have a detailed discussion in another sessions which are exclusively launched on ITC by Virag Shahji on this platform in the times to come. At that time, we can have a detailed discussion on this. Till that time, if you have any queries on this, you can let me know. And as discussed by Virag sir, we are pleased to announce our latest edition of GST Tracker, which is an e-book also and which is a paper-bound book also, which contains reference of all notifications, circulars, even judgments. The most beautiful feature of this book is that it contains all judgments, all synopses of the judgments are incorporated therein. These judgments have been categorized into particular sections as a step number 1. As a step number 2, these has been categorized. So if you are having doubt in a particular section which forms part of a particular category, you refer the book, refer the section, go to the list of categories. If that category is mentioned there, all the judgments, be it of High Court, Advanced Ruling Authorities, or Supreme Court, are given there along with its synopsis. So you can have a reference to this book. Mr. Virag Shah, you can place orders with Mr. Virag Shah, and we will ensure of its delivery. So with this, I end my session here. and I hand over the session to Garima so that she can take it ahead. And if there are any doubts, the participants may kindly ask. Over to you, Garima.
Yeah. Thank you, Kashish. Thank you for the insightful session. Now, since we are a bit short of time, so I'll just start with my session. My screen is not able to, I'm not able to share my screen.
Okay, Virag sir, can you give presentation access to Garima? I am giving it to you, Garima. It can allow you now.
Yes. Very good afternoon, everyone. Thank you, Virag sir. Thank you, Kashish sir, for this platform organizing these sessions. And today I'm here to give a session for the amendments which have been done under GST refunds as a result of the our GST Council meeting. So first of all, I'll brief out the points which we will be covering under this presentation. First point is about the rationalization of calculation of refund claim under inverted duty structure. Kashish sir, can you please confirm if my screen is visible?
Yes, it is visible.
Okay. So first of all, we'll discuss about the rationalization of calculation of refund claim which under inverted duty structure. In this case, we are going to discuss the important judgment of ICAI footwear, in which it was held that under Rule 89.5, the definition of net ITC, the refund for input services would not be allowed. So now the second leg of that formula of that refund calculation has been revised, and in that the output tax which is being payable, which was reduced from the original formula, now that has been proportionated. As a result of this amendment, there is increase in the refund amount. This is an amendment which is favorable to the assessee, resulting in increase. Why? Because the output tax has been now proportionated. Initially, the entire output tax which was payable, that was reduced from the ITC which we were calculating. Now the same has been proportionated. As a result, this will result in an increase in the refund amount. The second amendment would be, this is just basically a clarification. This is in respect of a circular which was initially issued 135/2020. So now, in respect of this circular, this basically, it said that inverted duty structure, if there is a refund and the refund is on account of unutilized ITC under inverted duty structure, such that the rate of the input tax is high and the rate of output tax is less. As per this clarification, which was initially issued 135/2020, refund was not allowed if it is on account of change in rate of tax. Supposingly, when the input and the output is the same, when I bought the good, the rate was 18%. Then there was a change in GST rate and the rate was reduced to 5%. So this circular 135/2020, it basically said that refund would not be allowed in case there is change in rate, and that too at different point of time. Now the question came that what would be done in case I am buying the goods at the normal rate, but my output has been covered under a concessional rate notification. So in that case also, am I not required to file for refund? Will I not get refund of unutilized ITC? So it came a clarification, and it said that if the output supply is covered under a concessional rate notification, then we can file the refund. The third amendment is in respect of electricity, unutilized ITC on account of export of electricity. Now, in this case, basically, many people, they were exporting electricity, but they were not able to get refund of unutilized ITC. So now there has been a clarification. In that clarification, a detailed procedure has been given for the people who are exporting electricity. The amount, the figures which have been emphasized are basically how this refund would be calculated, what will be the parameters for these refund, what all forms are required, what are the statements which are required to be filed by the people who are aiming to get refund on account of unutilized ITC. Then next is the refund. The government is trying that supposedly there is an exporter and the profile of that exporter is not very good. So basically at many times their refund is not processed at a greater pace, at a faster pace. So basically government is planned to come out with an amendment for those exporters whose refund has not been processed just because their domain is just because they've been given the strata of being a riskiest exporter because of their some background defaults which have been found out by the department. The next amendment is basically covering the procedure that how recredit would be done. The recredit in this case is basically for the repayment of erroneous refund. Now supposingly one client has got an erroneous refund, the erroneous refund can be on account of two criteria. The first criteria can be that the refund has been mistakenly credited because of unutilized ITC. There was an error in unutilized ITC. So there are some categories which have been specified, or otherwise it can be under 96 step. So if my exporter, if a particular person has got refund and now that refund was incorrect, that refund has to be repaid. So basically procedure has been given that how this recredit after the payment has been done of the erroneous refund, how this recredit would be done. So clarification has come on this procedure for recredit of refund. Then last which we are going to cover is the refund claim, that if a person is undertaking deemed export supplies, is the recipient of deemed export supplies, then how the refund claim can be filed by him. There were two queries which were covered, is basically on respect of the unutilized ITC, that whether this ITC would be read under section 17. Like if I am a recipient of deemed exporter supplies and I'm basically applying for refund, and that refund is on account of the tax which I have paid. So now the question comes that if you are applying for the refund on account of unutilized ITC, so whether that unutilized ITC would be covered in the section 17, would it be covered in the definition of net ITC? So this clarification also came and we are going to discuss this. So beginning with our first very important amendment in respect of inverted duty structure, there's been a change in the formula for the calculation of refund which have been filed under inverted duty structure. So now initially what happened was, in the case of refunds which were being filed, and those refunds were filed on account of refund of input tax credit, before amendment the maximum refund that was allowed was a turnover of inverted supply of goods and services. That turnover was multiplied by net ITC and was divided by adjusted total turnover. This was the basic formula. Now the second leg of this formula is that this refund amount was reduced by tax payable, and this tax payable was entire tax payable, total output tax payable on account of whether it is inverted rated supply of goods and services. So what the amendment came, if we can just look at the language, now the output tax which was payable on such supplies, this has been proportionated. And what is the proportion? The proportion is basically, what they say is that we divided by the ITC which has been availed on inputs and input services. The question came, what was the reason for this amendment? For this, first I will discuss the BKC footwear judgment. Basically, in the case of BKC Footsteps India Private Limited, Union of India, the Supreme Court came out with a decision, Honorable Supreme Court came out with a decision that the net ITC term would include only inputs and refund would not be allowed for input services. Then it was also argued that if we are not being allowed refund for inputs, then why it is that from the second leg of the transaction, the entire output tax is being reduced, because it can be for goods as well as it can be for services. So in this judgment, it was decided that the tax payable on such inverted supplies of goods and services, since it takes into account the entire tax payable on output supplies, so basically it was discussed, it was decided that by the Honorable Supreme Court, that a suggestion was made in which it was said that the formula is going to be revised in order to reduce the cascading effect of taxes, because since we are allowing the refund for only inputs, then why is it that in the second leg we are reducing the output tax payable on goods and services both? So basically it was urged that although the formula is to grant refund on account of input goods, we should not reduce the entire sum of tax payable. So our Honorable Supreme Court noted the arguments, and it was decided that the output tax is to be reduced after applying the proportion of ITC rule. So this was the reason that this amendment came under Rule 89(5). Here is an example of what would be the impact of the refund claim if it is filed in earlier scenario and if the refund claim has filed as per the amendment. So basically, if we say that a particular X person has a turnover of 5 lakh rupees and the tax is 5%. Now the ITC which is being availed on inputs is 1 lakh rupees, and ITC which is availed on input services is 40,000. So now if we use the formula, if we use the above formula, initial original formula, the formula which was before the amendment, this will give us a refund amount of 75,000 rupees. Now, if we see at the second leg of this formula, it is being said that the tax amount of entire turnover has been reduced to be 25,000. 5% we have calculated, and it is 25,000. So the refund amount comes out to be 75,000. Now the question comes, key for this output, obviously the goods and services both would have been used. So in order to give an equal balance, the refund has now been, the formula has been revised, because since we are giving the refund net ITC, we are including only inputs. So from the output tax part also, we say to do it proportionately. So basically this formula, the second leg, has been proportionated, in which it is being said now the entire net ITC, which is ITC on inputs, this will be divided by 40,000, that is on input services. So this proportion has been made, and as a result, now we have an increased amount of refund. So basically this is a very welcome move and favorable for the assessees, in which the refund quantum, it has been increased. Now moving on towards the second clarification, which came in inverted duty structure. Again, this was related to the inverted duty structure. The clarification is in respect of the circular, which was originally circular number 135/2020, dated 31st March 2020. First of all, let's discuss what was this circular. This circular, as per this circular, it said that in cases where the input and output supplies, they both are remaining same, they are same, input is also same and the output is also same, but they are attracting different tax rates. My input is attracting a tax rate of 18%, my output is attracting a tax rate of 5% because of change in tax rate supposedly at different point of times. So now supposedly, like if I use an example here, there is a change in tax rate and the product is cut and polished diamonds with effect from 25th January 2018. Now, what is that change in tax rate? The change in tax rate is basically that the tax rate has been reduced from 3% to 0.25%. Now, if my input is purchased on 25th January at the rate of 3%, the output rate would be 0.25%. So now on output, I have to pay 0.25%. On input, I had paid 3%. Now my product is same. This is resulting in what? This is resulting in accumulation of ITC, and the reason is because the input is charged at a higher tax rate and the output is at a lower tax rate. So basically what was happening is the taxpayers and traders who were purchasing the inputs at higher rate of tax and they were selling out at lower rate of tax, they were not eligible to claim refund. Why they were not eligible to claim refund? Because of this circular. Because this circular said that if the inverted duty structure is on account of change in tax rate at different point of time when a particular person is dealing in the same goods, then you would not be allowed to file refund under section 54(3). Now, if my taxpayer is not allowed to file refund, then what this clarification said? This clarification came when my concerned person is basically supplying the goods under concessional notification. Because as per concessional, if my goods are covered under concessional notification, the rate of input would be higher and the rate of my output would be lower. In case of like merchant exporters, where concessional rate is being used. So they were also facing difficulty because they were dealing in the same good. The input was charged at a higher rate and the output was charged at a lower rate. And the reason for this lower rate was basically my exporter, the person is supplying goods under concessional notification. So this amendment came as per which the clarification they said that if my output supply is less, rate of my output tax applied is less and rate of my inputs is more at same point of time, then the credit on account of such supplies, this will be admissible for refund. So this was also a welcome move in which if a particular person is supplying goods under concessional notification, he would be getting the refund and it would be not covered by circular number 135/2020. Another aspect which I like to cover here is that whether this circular 135/2020, which does not allow us to file refund under inverted duty structure, because different tax rates are there of the products of input and output at different points of time. How much is the validity of this circular? So just one point to note down here is that this section 54, it is nowhere restricting that if the input and output are having different rate of taxes at different point of time, then a particular person cannot file refund under section 54. So what I will say is that this circular 135/2020, which initially came, this circular is not at all binding on the taxpayers, and this has been well held in the Supreme Court judgment of Commissioner versus Millwool Rock Fibers Limited. In that, it was said that the circulars which are being issued, they are not binding on the assessees, they are not binding on the taxpayers. So first is that circular is not at all binding on us. Then there have been like circulars, it cannot be contrary to the law. Since section 54 is nowhere restricting that refund cannot be allowed of unutilized ITC if the input tax rate and the output tax rate is different at different points of time, it is nowhere written under section 54. So basically this clarification, this is something which is contrary to the law, and again the circular cannot be contrary to the law, and it has been upheld by Honorable Supreme Court in the case of Commissioner versus Ratan Miltring and Wire Industries, where Supreme Court has said that a particular circular which is being issued, that circular should not be contrary to the statutory provisions which do not have any existence in the law. If a particular circular is in contradiction to the statutory provisions, then it will not be binding. Then third grounds which we can say is that the circular cannot impose the conditions which are not existing in the law, because the condition that you can file refund for IDS only when the rate of input and output are same, and when the rate of input and output, they should not change at different points of time. then that circular does not become binding. So basically, this circular, it said that it cannot impose conditions which are not existing in laws. This was again held by the Honorable High Court of Bombay in the case of Alpha Laval India Private Limited and Union of India, where it was said that you cannot impose a condition which has not been given under the law. So basically, this condition was not given under Section 54, so this circular is not that valid. And again, the last which we can say is that the administrative authorities, they cannot give their own interpretation to the statutory provisions. Like this Section 54, to an extent, has been interpreted, and which is not as per law, because the law nowhere is restricting. So this restrictions given under circular, that is not much binding. But then again, yes, given the clarification that concessionals, if a particular person is supplying under concessional rate notification and that output has a lesser rate, the input has a higher rate, the circular clearly clarifies that yes, these people can file the refund under inverted duty structure. However, the persons who have been restricted by Circular 135/2020, we would conclude that this circular is not much valid, and the grounds I have just discussed, that on what basis we can argue the binding of this circular. The next point which we will cover here is that a particular person is exporting electricity. So now, how will he get the refund of the unutilized input tax credit? What the issue people faced was that electricity was classified as goods, and as a result, in goods, like the refund for the electricity, that can be filed in goods category only. So now at the time of filing, it asked for the filing of shipping bill and bill of exports. Now this thing is not available in case of electricity. So now, how the refund can be filed for the people who are exporting electricity, how they can get the refund of unutilized input tax credit. So the extent provisions under Rule 89 of the CGST Rules 2017, it provided that if you have filed the refund under the category of goods, like if you are supplying goods, if you are exporting goods and you're filing refund under that, then you have to give the details of shipping bills, you have to give the details of the bills of export. In case refund is being filed under the category of unutilized ITC in respect of export of goods. Now this thing is not available in terms of, for electricity, we are not having any shipping bill details, we are not having any bill of export details. So the challenge which was coming with industry was that how the refund is to be filed for this category. So now basically, under Rule 89, Sub-Rule 2, a clause BA has been inserted, and another amendment has been made under Rule 89.2, which now excludes the term other than electricity. Now, the word term other than electricity has been included, and a separate clause BA has been introduced. So the amendment somewhere looks like this. Before the amendment, under Rule 89.2b, it was said that you have to give the documents in which a statement has to be given, and that statement would contain the number and date of the shipping bills, bill of export. Like if we are exporting goods, if we are filing refund on unutilized ITC, so we have to give a statement, and that statement will contain the details like what is the number and date of the shipping bills, bill of export, number and date of the export invoices, if the refund is on account of export of goods. So basically, even if we are exporting electricity, then also we were required to give shipping bill details, bill of export details. Now comes what was the amendment? What did the amendment do? As per the amendment, under Rule 89.2b, this term has been added other than electricity. So basically, this statement which talks about the details of shipping bills, bill of export, number of export invoices, now this statement is not to be given in case of electricity. So now the question comes that if this statement is not to be given, what is the other document that we are required to give? So now, sorry, the entire procedure for filing of the refund of unutilized ITC in case of export of electricity, that has been prescribed, the manner has been changed, and here comes the amendment. The amendment is that they say that you have to give a statement, but that statement now will be containing the number and date of export invoices, details of energy exported, the tariff per unit of electricity as per the agreement, like what was the agreement entered, what was the tariff that was entered there, with a copy of statement of schedule energy, and that schedule of energy that is given by RPC. So basically, now earlier it was asked that for electricity also you have to give the shipping bills, you have to give the bill of export, but now it is asking for a statement, and in that statement the details would not be of shipping bill of export, it would be amount the tariff, rate of tariff, how much is the unit of energy which is being consumed, what are the export invoices that we have made. So this is a separate procedure which is being introduced for export of electricity. Now comes like what actually is going to be the procedure, because there is no such category where we can file a refund on account of export of electricity. So basically what they are saying is that till the necessary changes are brought on the system, on the portal, on the GST portal, what the clarification is said, it is said that we have to select the category as any other category, and in that any other category there is a remark column. So in that remark column, we will just write the word export of electricity without payment of tax. So in remark column, there will be export of electricity without payment of tax, that we will give remarks. So this will give an impression that yes, the applicant has filed for export of electricity unutilized ITC. Now, initially, in many refund applications like the categories, other categories of the refund in which we file, basically the as soon as the refund is filed, the amount is like it is being deducted from the electronic credit ledger. Now comes key, when we are filing for this export of electricity, will the amount be debited from our electronic credit ledger? So it is basically said that this amount, that the applicant is not required to make any debit from the electronic credit ledger at the time of creation of RFD 01. So first thing is that RFD 01 has to be filed under any other category, in which we have to mark the remark that this refund is being filed on account of export of electricity without payment of tax on accumulated items. The second point which is to be kept in mind is that at the time of making this refund application, no debit has to be made from the electronic credit ledger. Like at this point of time, at the time of filing the refund, we are not required to debit the electronic credit ledger. Then what is the statements that are to be accompanied with the RFD 01? First is statement 3B and not in statement 3. So there is a separate statement, statement 3B, which is to be given in RFD 01. What this statement 3B talks about, it talks about the details of export invoices. Then it talks about the energy which is being exported, the tariff rate as per the agreement entered, and all this has to be entered in the statement 3B, and the statement 3B format has already been prescribed. Then there is one thing which is called as schedule of energy. We have to give a statement of schedule of energy also for the electricity which is being exported, and this schedule of energy that will be given by the RPC to us, that is Regional Power Committee Secretariat. This will help to get us the schedule, and this is a very important schedule which all the exporters of electricity, they have to file, they have to give. So along with RFD 01, there is a statement 3B in which the details will be given of all the export invoices, energy tariff, tariff rate, jo gaya wo, details of energy exported, and there will again be a statement of schedule energy, and this statement is being given by RPC, that is Regional Power Committee Secretariat. So now after RFD 01, we give both these documents. There is again how the formula is calculated for export of electricity. Is there any change? So just the formula is same, like turnover of supply of goods plus services into net ITC divided by total adjusted turnover. One point to be considered here is that in adjusted total turnover, like when we talk about adjusted total turnover, would it include the electricity which is domestically supplied? So just to highlight here that adjusted total turnover, when we talk about for calculation of refund of unutilized ITC on account of export of electricity, this will not include the electricity which is supplied domestically. Why so? It is because since electricity is only exempted from levy of GST, so basically under Rule 89 sub Rule 4, this amount would not be included. So now, after my officer has scrutinized the application, now we have filed the RFT 01 along with statement freebie and the statement of energy. So now, what will be the next step? The next step would be that the officer would scrutinize my refund application, and if the officer is satisfied that the amount being payable as refund is okay, everything is okay, then he will request the applicant. Now, he will request the applicant to deposit, to debit the amount from the electronic credit ledger and furnish a copy of DRC 03. So after the DRC 03 is given, then my officer will give the final refund order under RFT 06, will proceed to issue, and the payment order would be under RFT 05. So this is the entire procedure for how the export of electricity, if I am going to file a refund of unutilized ITC on account of export of electricity. So basically, what all things I have to give? First, I have to file RFT 01. I have to select the category as any other category. Then, at the time of filing refund, I'm not required to debit the electronic credit ledger. I have to give a statement freebie. I have to give a schedule of energy. Then I have to accompany. I have once my officer will scrutinize my application, he will ask me to debit the amount, and that amount would be paid through DRC 03. And then my officer will finally issue me RFT 06 and RFT 05. So this is all about export of electricity. Then comes the pending of refund of IGST on account of goods for risky exporters. So basically, there are exporters, there are people who are not getting refund. Why? The refund is being withheld, the refund is being suspended on account where the exporters have been classified as risky exporters, because like GST officers have found out that there has been some violation of some rules, there's been violation of some custom laws. So basically, their refund of IGST that has been withheld. So many people were facing issues in this. So basically, it has been discussed that in order to expedite this refund process, an amendment would come out for the transmission, for the smooth transmission of such IGST refund claims to that particular assessees, and an amendment has been proposed that this refund be soon processed for the risky exporters. Now comes the next amendment. This is in respect of repayment of erroneous refund. First of all, let's talk about what is erroneous refund. Friends, supposingly, it is being said under Rule 86 sub Rule 4B of CGST rules that in case the refund has been erroneously sanctioned under the following categories, it is covered under the category of erroneous refund. What are the categories? The first category is on account of refund of IGST. Like we have obtained the refund of IGST, and after that we found out that this refund was not correct. There were some errors. So now this erroneous refund that would be repaid, and then again it would be recredited. How this process would take? So basically, first category covers is the refund of IGST that has been obtained by not following the provisions of Rule 96 sub Rule 10. Second category is on account of refund of unutilized ITC, and that unutilized ITC is on account of export of goods and services without payment of tax. Third is on account of refund of unutilized ITC, and that is on account of zero rated supply of goods and services to SEZ unit and developer without payment of tax. And last is refund of unutilized ITC due to inverted structure. So basically, what we can say is that under Rule 86, erroneous refund has been classified under two categories. First is it is covered under Rule 96 sub Rule 10, and second is it is on account of unutilized ITC. The unutilized ITC can be on account of export of goods or services. It can be on account of zero rated supply of goods or services to SEZ unit or developer without payment of tax. It can be on account of inverted duty structure. So basically, as per this rule, what the procedure has been prescribed is that first of all, my applicant who has got the erroneous refund, that particular person will write a request to the department, to the respective officer, that he has got an erroneous refund and he is making the payment of that refund through DRC 03. Once an officer gets the request and the payment of the tax amount through DRC 03, the officer within a period of 30 days, a time period of 30 days has been set, has been allowed for the recredit, and that recredit would be 30 days from the date of written request which is being received by my officer. Like now, since the portal is not working, so the clarification that said that a written request can also be made, and within a period of 30 days from the written request, my officer is required to recredit that amount, and that amount will be recredited using GST PMT 03A. So basically, the objective of GST PMT 03A was that assessees would have a better, easy mechanism that if they have got a refund erroneously, they have paid the refund back through DRC 03, that refund amount can again be recredited to them, and to recredit that amount, a facility, new facility that is being introduced is GST PMT 03A. So basically, there are only 4 categories in which this application can be filed. Is either it can be refund of IGST under Rule 9610, or it can be under 3 categories covered under unutilized ITC. The next comes the refund which is being claimed by the persons who are receiving the deemed export supplies. So first of all, let's talk about what is deemed exports. So as we know, the term is being said as deemed export. So it is basically that the goods are not crossing my borders of India, but even then they have been categorized as deemed exports. The consideration for them that can be received in Indian rupees, or the consideration for them can be received in convertible foreign exchange. In any of the 2 categories, my consideration can be received. So basically, deemed exports are the goods which are not exported out of India, they are not crossing the border of India, and their consideration, it can be received in Indian rupees also, or it can be received in convertible foreign exchange also. So basically, it is for goods, it is not for services. Now, what the clarification came, what the circular number 174/2022 said, it talked about the unutilized ITC which is accumulated, and that unutilized ITC, what is the nature of that unutilized ITC? First of all, let us understand that. The issue was that whether the input tax credit which is availed by the recipient of deemed export supply for claiming of tax paid on supplies is regarded as deemed exports would be subject to section 17. So basically, I have paid a tax on the deemed exports. Now, when I am paying tax on those deemed exports, I am required to get, since I am the recipient of deemed exports, so I want the refund of that tax which is being paid. The question came that this input tax credit which is being availed by this recipient of deemed export supplies, whether this input tax credit has to fulfill the conditions would be subject to the provisions, whether it is eligible or not, of section 17 of the CGST Act 2017. So what the circular came is that this refund is on account of the tax which I have paid on deemed exports. So this refund is in respect of deemed export supplies. It is basically the tax which is being paid by my recipient on these supplies. So considering the difficulties which is being paid, CBIC has issued this circular. They did this to enable the persons who are recipient of deemed exports, like an earlier circular which came 147/03/2021, so that my people can get a refund on such supplies. So what was this circular? This circular has further been clarification has came that if a particular person is filing for the refund, when that particular person is a recipient of export deemed exports, then that ITC that would not be covered under the provisions of section 17 of the CGST Act. So basically, the input tax credit of the tax which my deemed exporter recipient has paid, that will be allowed to the recipients for claiming the refund. It would not be covered, that ITC would not be covered under the provisions of Chapter 5 of the CGST Act. That ITC would not be covered under Section 17 of the CGST Act. Then another issue which was clarified was that whether the ITC which is being availed by the recipient, now whether that ITC would be covered under net ITC. Like as we know, the formula for rule refund of unutilized ITC under Rule 89.4, Rule 89.5, it talks about net ITC. The question came that whether this tax which is being paid on deemed export supplies by my recipient, whether it would be covered under the formula of net ITC for the computation of refund of unutilized ITC under Rule 89 and Rule 89.5 of the CGST rules. So it is being said that the ITC of the tax which is being paid on deemed supplies, this is not covered under Chapter 5 of the CGST Act. Again, the same thing they said, that it is not covered under Chapter 5 of the CGST Act. And moreover, this tax, like this is such ITC availed by the recipient, this is not regarded in the, not included. The objective is not to include this ITC in the net ITC definition for the computation of refund. So this clarification has said that my ITC, the refund, like if I am filing the refund for unutilized ITC, then the tax which I have paid on my receipts of the deemed export supplies, that tax would not be covered under Chapter 5 of the CGST Act. It would not be covered under Section 17, like which talks about fulfillment of the conditions to be an eligible ITC. My ITC would not be covered in that. So these were all the notifications that was regarding the clarifications and notifications in respect of refund. So if anyone has any query, can ask. There is a query that pattern manufacturing in India, to which consideration received? Mani has asked. The query is not very clear. Mani, can you please retype your query? It is not bit clear. Anyone has any other query?
Garima, there is one query by Paksh.
By
Kaplesh Bhatt.
Kaplesh, but just changes in 3B. This is in respect of changes in 3B. Just a second. He has left. Kalpesh Bhatt is left.
Okay. Now Chetan Gujarati ji has sent.
What would be the deadline for filing refund under inverted? Chetan, you can file the refund application for the entire period.
This is answered in my PPT. For inverted duty structure, period of first day of March 2020 to 20th February 2022 is being excluded. So if we consider April 2020, the relevant date for April 2020 is 20th of May 2020, and the period is excluded till 28th of February. So he will get a fresh period from 1st of March to he can file now. Two years will start from what we can say 1st of February, March 2020.
2021, yes.
2022 will start from 1st of March 2022.
Manish Joshi ji has asked for repetition of aspect of refund on deemed export supply. There is just one clarification. It is basically for deemed exports that if I am a recipient under deemed export and I'm filing the refund for unutilized ITC, so this clarification has come and they have said that if you are filing the refund for unutilized ITC, and it is basically in the nature of that you have paid the tax on the supplies which you have received. So there was confusion that whether I have to read that tax paid under the category of section 17 or not. So this is just a clarification that don't apply it under the provisions of section 17 would not be applicable on this. First thing is this, and second is ki while you are calculating the formula for net ITC, so in net ITC also this amount would not be included. So this is just a clarification in respect of the recipients for deemed export supplies.
So the query of Abhishek is also answered by me. That rule 80 sub 3 says it's 5 crores. So if there are any other queries, we can take up. Else the Viragji may proceed to close the session for today.
I think no, there is no such query like before 3B. Everything is done. Kalpesh is left. Deemed export I have explained.
Yeah, before any more query come, I would like to request all the attendees to connect with Kashish Gupta ji and Garima Jindal ji over the professional network on LinkedIn and other social media as well for a longer association. It should not be only for this webinar. They have taken a wonderful session for today in the best presentation they have presented. Very interactive or highly interactive session, I can say, answering all the queries, each and every attendee's query they are solving by answering on chat box or by writing or by speaking, and it's a great effort by them. So I'd like to request that you should also connect with the longer association with them. If they are both available easily on LinkedIn as well, so you should connect with them. Obviously, they will share the email ID and presentation as well. By mail we will share with you. So meanwhile you can connect with them on social media as well. We have a sir Kashish sir, we have a question from Mani ji and Chetan ji. I think Chetan ji is also appreciating the effort. Wonderful session, thanks a lot. I would like to tell that this session will also have live on Twitter, on LinkedIn, on Facebook, and also on YouTube. So people are watching there as well. So, but we can take question answer from here only. So I would like to request everyone to check here and share this session afterwards on your social media, and for the benefit of all, you can share with your team and other colleague as well. So over to you, Kashish ji, for Maniji's question. Okay, you already answered.
I have answered. You can let the audience know about book of GST tracker.
Yes. So before that, Kashish, I would like to tell that can you inform about your book, which is recently published in 2022 about GST tracker, everyone.
Garima, can you end your screen sharing?
I will. Okay. Just a second.
Yes, Kashish, you can share your screen.
It has stopped.
Yes, yes. So this is the book on GST tracker, which we have launched recently. And as I made clear in the opening remarks of my session, this book, as you can see on the screen, contains notifications, circulars, orders, ROD orders, instructions, and approx 3,200 judgments or rulings which have been issued till date. So in this book, the discussion is done section-wise. If you have any query, go to that particular section. It will give you the amended language of the Act as well as rules as on date. It will also give you the list of all the notifications, circulars issued under that particular provision till date. And the journey doesn't end here. In this book, you will also get reference of all the judgments and rulings issued under a particular section at one place only, along with crisp synopsis of the judgment. The judgments have been categorized as per the category of issues. So that your search can be made very small and very easy. You just need to know the section number and the category of your query, which you have to check from the list of categories given on the top of the section. So doing so, I think this would be a very good book to help you to understand the law, to understand the legislative history, as well as judicial position over the subject matter till date, so that you can form your query, your opinions, or your views, taking into consideration the position of law as well as judicial position of law till date. And this book we are offering to Viraj Shah sir, and sir will make further announcement in this regard. Over to you, Viraj sir.
Yeah, so I think MRP is around 2000, or whatever will be MRP is there. We are giving 30% discount who are attending today, and we will send a mail also to each and everyone, so they can take the benefit of this discount as well. That discount, after discount, whatever amount will be there, that will be including all posting charges as well. It will come to directly to your home or office, whatever address will be given, without any additional charge. So this amount and the exact price and the costing and the MRP and the details more about in the text form will share in mail. So thank you so much, sir and ma'am, for the wonderful deliberation and interactive session. Thank you so much.
Thank you, sir.
It will be
Thank
appreciated by attendees, and they will be highly knowledgeable after this session what GST Council has decided. So friends, would like to tell, please come tomorrow as well. We have a great session tomorrow. We have a new rates for goods and services which will be applicable, will be taken by Rakesh sir, and another session by Rohit sir. So please join us tomorrow sharp at 11 o'clock as well. Thank you so much. With this, we have concluding our today's session. Thank you.